What's the best founder trait you see over and over, and how do you spot it in the first 10 minutes?
I would say vision, and I spot it through a combination of storytelling and enthusiasm around it. Effectively, what vision kind of captures for me, though, is why that person is uniquely suited to go after that problem. Why is it a single obsession, right? Single-minded obsession for them? How big and ambitious the kind of idea for the impact that they can have with their business really can be. How do you spot it in the first 10 minutes? I let them talk. And I want to hear how they got to where they are. Like, why are they sitting there in front of me and telling me that story? There is an origin story for that, and I want to hear it. Then, it largely becomes intuition, and a lot of that intuition is wrong, but sometimes it happens to be right.
Hey everyone, welcome back to the Ignite podcast. Today we're thrilled to have Lorenzo Thione on the mic. He is managing director at Gaingels, a serial entrepreneur who sold his natural language startup to PowerSet to Microsoft, a co-founding chairman of StartOut, supporting LGBTQ plus founders, and a Tony Award-winning Broadway producer. Wow, so much to talk about. He sits at the rare intersection of venture, technology, and storytelling. Built a career proving that nonlinear can be a competitive advantage. Thanks for coming on, Lorenzo.
Hey, thanks, Brian. It's a pleasure. Excited to be here.
Yeah. And so for the audience, it's funny, Lorenzo and I realize we've collaborated on many, many deals over the years, but we've actually never spoken face to face or on the, Zoom or phone call, or never met. So this is the years in the making at this point.
Yeah, that's right. It's like you kind of seem like you think you've come to know someone, and you're like, wait, we've never really spoken, have we?
Yeah.
Like, I don't know where you were based, actually. I don't know where from for you.
I'm east of Sacramento. I moved out during COVID, so I was in the Bay for 10 years, and then I didn't start Team Ignite until I was sitting here in my pajamas during COVID. I was like, I think I'll start a syndicate and start, syndicating investments. This is pretty fun.
COVID was a good time for it, actually.
That was a great time to do it, right? Right in COVID. But yeah, I'd love to get your origin story.
Yeah. So as you might kind of intuit from my name, I'm Italian. I was born in Italy, in Milan, and I grew up there and didn't really kind of expect necessarily I would end up in the States, but I ended up taking on a scholarship for what was supposed to be an exchange period in the US. And then once I got to the University of Texas in Austin, I finished up my undergraduate degree and ended up signing up for graduate school. So I stayed for graduate school. And it was the kind of beginning of the prior growth phase of artificial intelligence. Like, as if you kind of like break down AI's history and evolution, you had like the first summer in the 70s and mid to late 80s. Then you've got the first winter through all of the 90s. Then you've got the second summer really in the early 2000s that led to kind of the early machine learning, deep learning kind of advances. And then there was kind of this quiet period until the generative AI and transformer era kind of really came to be. So I was really getting my degree and getting interested in sub branch of artificial intelligence, which now is really en vogue. At the time was probably not as much so, which is natural language analysis and processing, computational linguistics. A lot of it was symbolic. Statistical methods kind of started to take a little bit more the front stage. But that's sort of what became what my focus was through graduate school, and then ended up graduating and through an internship became a scientist at Xerox PARC, or rather FXPAL, which was a sister laboratory with PARC. But I was effectively down the hall from Alan Kay and a bunch of really amazing people, that sort of make up the history pages of computer science. And it was an incredible experience. And as you may know something about Xerox and Xerox PARC, they have like a really great track record of inventing amazing technology and a really poor track record of making any money out of it. And I was focused on, as you would at Xerox, document understanding, information retrieval, kind of all the aspects that kind of dealt with unstructured information that often was in documents and so on, and ended up working on this technology that looked a lot like RAG, effectively looked a lot like retrieval augmented generation, just using different type of technologies. We were using very expensive computation to parse and understand the content of each sentence, sort of in a narrower scope than what very large multi-billion parameters transformer models do today. But we were doing a very similar semantic extraction and then indexing that information into some kind of database that would be useful to search and retrieve information using natural language. And so that was the beginning of what became the technology for the company I co-founded called PowerSet. In 2003, 2005, started the work around PowerSet, which was born with the mission of effectively creating smarter AI-powered search. That sounds like something that people give for granted and understand why that would be useful today. It really wasn't at the time. The amount of sort of denial and skepticism that we encountered, not in whether we could do it, which would have been legitimate skepticism, but rather whether anybody would need it, was what we were fighting up against, which is effectively the consensus was that search had been solved, Google was fine, and that keywords that all people wanted to do was using keywords to retrieve the information that they wanted, and not really understanding that actually, and the idea is nobody is going to type in long sentences into a search box, which is ridiculous if you think about it today. Whether you've augmented it with speech recognition or not, people are clearly very willing to write up paragraphs of instructions and prompts and go back if the experience you get is 100x better or transformatively better than what could have been done before. But we did have some amazing investors that kind of believed in it. And so I think it was Founders Fund first ever investment, and Foundation Capital was one of our investors as well, and built what I can only describe as the absolute star team around the topics of AI, information retrieval technologies, search, even ML ops and data ops at the time. Our company was so computationally intensive, demanding for computation at a time when the cloud didn't exist, that we actually attracted some investments from Bezos's family office. And we one day received a phone call, and it was like, hey, from the Amazon team, it was like, we're thinking we have all of this extra infrastructure, and we're thinking that we might let people use our extra computational infrastructure when it's not used. We're calling it Elastic Compute Cloud, EC2, and we think that you'd be a good partner to test this out. And I think we were the very first non-Amazon users of EC2, so ended up building a lot of infrastructure to manage distributed operations in a hybrid between the cloud as it existed at the time and our own data center, which was still at the time when you had your own machines and procure them and provision them on your own data center. And built an awesome team. As you mentioned, a few years later, we were fortunate enough to exit the company in a good acquisition to Microsoft. Microsoft already was showing, I think, really signs of foretelling leadership in seeing AI as a key to competing in search. And we became some of the technology that made up the original launch of Bing. And I think we provided, ultimately our technology was too expensive and didn't scale out quite as much to really be usable across the entire web. And the performance of it was significantly better on informational type of queries than it would on a lot of what the web was being used for at the time, which was navigation, or search was being used for at the time, which was navigation. And so I think we launched as part of Bing, powering queries that were hitting Wikipedia and Quora and so on. But we also provided a really great story to Microsoft as to why Bing was different than Live Search, which was their product prior to Bing, and why that was a worthy alternative or competitor to Google. And I think we were part of that early story. But besides that, I think that the thing that became something I'm really proud, like I said, is the amazing team we were able to put together. And the folks that were part of the PowerSet, original PowerSet team, all went on to either lead incredible organizations and AI efforts and research at large companies like Nuance and Google and eBay and LinkedIn and then Adobe, or started companies that became generationally meaningful in their own right. One of the founders of GitHub was part of our team, as well as Weights and Biases, Crowdflower, Touring, and Runway, even Runway Financial, not the video generation one. So
Wow.
really incredible group of people. After the acquisition, my life sort of kind of, like you said, became nonlinear in a lot of different ways. And obviously, I had the ability to begin supporting other founders, and a lot of the people that came out of the PowerSet team and the companies that they were starting, I had the fortune of being able to invest in them, and then became an angel investor first in my own right, as well as having you mentioned starting StartOut, nonprofit, which is now the premier nonprofit organization supporting LGBTQ entrepreneurship across the high growth landscape, as well as being part of Gaingels from its very origin. And I'm glossing over a couple of other startups, as you would, things that didn't last long, and others that actually ended up being profitable and bootstrapped from day one and are still around, which is something I think I recommend to every entrepreneur. Great thing is not to have investors if you don't have to have any. But I was part of the Gaingels kind of experiment, so to speak, from the very beginning when we were just a small club of investors that were trying to initially invest within the LGBTQ entrepreneurial community, and then over time grew into what it is today, which is one of the largest and most active venture syndicates in the world, supporting diverse leadership, talent, and capital across the entire venture ecosystem. So we will invest alongside great other investors. So we're not lead investors, right? We bring capital from a very diverse group of capital allocators. We support our portfolio companies with their hiring and their governance and board recruitment and advisory board recruitments, often tapping into pools of talent that they don't have access to on their own. And we've grown in this way over a portfolio that is now 2,700 portfolio companies.
Wow.
Over $1 billion in invested capital. A really amazing organization.
2,700 over how many years?
Well, technically since 2013, but like the model really didn't start to evolve until 2018. So 2018, 19 is when I would actually start to count. It's obviously a very large amount of relatively small investments, although especially because we invested both in the early stage and at the late stage, we'll have some larger deployment of capital. And over time, we've attracted LPs that are more family offices or multifamily offices and institution in nature. And so the capital that can be allocated to some of those deals becomes higher. But largely, we are still a very sort of grassroots, diverse group of investors that have this double bottom line of both investing in amazing companies that have incredible venture investors that we follow, but also with an eye to knowing that those companies want our help and are aligned with us in wanting to build truly inclusive organizations at the level of talent, governance, and capital. And we make this also very approachable so that investors can often invest minimum investments that are very, very small compared to sometimes what you would need to do if you were an angel investor trying to get on a cap table on your own, given the fact that often you just can't, right? Especially if you're trying to invest in Series B, Series C, and so on. You run a syndicate, you know how the business really is, but effectively we work as both just the syndicator, which is capital, but also as almost like a fund, meaning that we are partnering with the companies look to us to help them in all the ways we can help them. And now the depth and the width of the network itself has become an asset, because the amount of business introductions, investors introductions, business opportunities that come from cross portfolio connections have become part of that flywheel that kind of continues to push it forward. And then there's my other hat as a writer and producer in the world of Broadway, which I'm very happy to tell you more about if it's relevant to your interest.
Yeah, I'd love to hear about it. How did that come about?
So I mentioned coming to the US, now 25 years ago. It was not too long before September 11 happened. And that experience really had a big impact on my personal life as a recent immigrant, as a friend to many others who were immigrant, many of which fell into categories of groups that were all of a sudden being looked at with suspicion and with less than friendliness, I would say, in the immediate aftermath, for no fault of their own, other than either the way they look, the color of their skin, or their national origin. That experience in a lot of ways kind of created a nugget of awareness and understanding and sensibility that was only amplified by my own experience. And like I said, as an immigrant, no matter what, you feel the precariousness of building a life and a career and a business and all of these kind of connections to a world to which you feel there is something missing in the kind of, you're not a citizen yet, you may be working towards permanent residency and citizenship. And it only happened several years later for me, right? First becoming a green card holder and then a naturalized citizen. So in 2008, I was already a green card holder, but not yet a citizen. I met randomly after the acquisition, I met the actor George Takei. So I met him in a theater one evening and we are striking up conversation and, just making small talk. But he ends up telling me the story of his childhood. When he was a child of 5, he and his family were taken in the middle of the night at gunpoint by the US Army, put on trains with blacked out windows, and taken to what would become a prison for them for 3.5 years. Actually, several different camps that they were imprisoned in. As we know, this is one of the most egregious violations of US constitutional rights. These were citizens. He was born in the United States. His father was born in the United States. His mother was a naturalized citizen. So, this was happening across the entire southern area of the United States, southwestern area of the United
Well,
States.
definitely up in Washington State, where I'm from. Yeah.
That happened too in Washington and even in Canada, actually, but 120,000 people. And as he was telling me the story, obviously kind of the connections to my own understanding and experience of that precariousness, of that sort of Damocles that you have, where all of a sudden one day you can wake up and the geopolitical order has changed. And your life is thrown upside down for no fault of their own. And of course, we are seeing the relevance of that story today, even more than I could have ever anticipated in 2008, where what I was feeling were the echoes of September 11. But things, in the years that came, sort of made that story even more relevant. But at the time, I was like, you know what? This is a story that's too important and too few people know it. And it happened to be also what he described as his life mission, to tell the story of the internment of Japanese Americans. And, you started the conversation saying I live at this intersection of storytelling and entrepreneurship. And I think to be a good founder, entrepreneur, money raiser, and so on, your primary skill is to be a good storyteller and to create an emotional connection with your audience, whether it be an audience of one that you're raising money from or trying to hire for your business, or an audience of many selling your products to, or telling a story where your product is a story. Having never written or worked in the theater before, I got it in my head that I would. And with a good friend and collaborator, pitched the idea to George a week or two later about telling this as a musical, as a Broadway musical, or rather a musical that would end up on Broadway. And so we embarked on this journey that became a 7-year journey of writing and rewriting and refining a musical titled Allegiance, which opened in 2012 in San Diego at the Old Globe Theater. And then from there moved to Broadway in 2015, starring George Takei and Lea Salonga, which is now available actually as a film. People, we did it as a movie on Broadway. People can still see that production, which, is one of the great prides and joy of my life, and became the beginning of a separate and parallel career as a creator and creative producer on Broadway, the West End, and in theater in general. And I've been fortunate to be part of the producing team of a lot of other shows, including some that people in your audience would know: Hadestown and Juliet, Days of Wine and Roses, and The Notebook, and so on. And currently working on several new projects, which we've originated, co-created, originally written, and then brought other collaborators to work on, including an upcoming West End musical called Indigo, which premiered last summer just north of London.
Amazing. What an amazing story. There's so much to unpack there. I'll probably circle back to the beginning and then we'll kind of take it step by step, because I want to know, back to the days of PowerSet, like, what did you learn about being a great investor by being a founder who went through an acquisition? What was it that kind of informed how you invest now? If you think back, that was it the timing was right for PowerSet? Was it the team? Yeah. What is it about the PowerSet experience that kind of informs your current investing framework and how you think about it?
Well, I learned some important lessons about how this world works without trying to pass judgment on whether that's right or wrong, or whether it can be changed or improved. And that is the absolute and ultimate important of relationships and network. And I was the technical founder in a team of 3 where my 2 other co-founders had long established networks within the Silicon Valley community. New investors had worked as entrepreneurs in residence at funds, knew a lot of the people that were involved. And especially at that time, but hasn't really changed, the importance of that to open the right doors cannot be underestimated or understated. And then I think I learned the importance of a founding team where you have the right complementary skills and the right complementary kind of experience that can really answer and address investors' concerns in the early days, right? And so I think we had a really great founding team that brought operational experience, fundraising, and executive experience and technology, both from something that was so research oriented, not only the work I had done at Park and that was part of the technology we were licensing and bringing, but also the people that I was working with at Park that we were able to bring on the team at PowerSet. And so the pedigree and the IP that we had was really strong. And I think what that does in terms of how I look at investments today is, in a similar way, is first of all, the amount, the time in any investor's day is limited, and the amount of potential deal flow that exists out there is unlimited, effectively.
Effectively, yeah. 30,000 pre-Series A companies a year, right?
So you have to decide on some kind of proxy for how you're going to filter, and filter through the warm introduction, the connection, the people that you're co-investing with or the co-invested with, or the people that you've worked with. I mean, obviously, is already a really strong proxy for, the quality of the team and capabilities and sort of skills that are critical to the founder journey. And I think to the extent that we've seen institutions doing some of the work that universities couldn't quite do. I mean, universities like Stanford and Harvard, certainly, and MIT had sort of a history of creating entrepreneur classes, people that were technologically skilled, but that also had the right qualities to be founders. The next big evolution we've seen in that institutional filter, I think, is probably Y Combinator, where that became one of the ways in which, you would know that if someone had been receiving funding from YC, you had a basic of what you would look for in the quality of the founder that someone else had screened for. And so that became one of the filters investors used to kind of decide how to, wean down from the 30,000 kind of companies to the ones that you can actually take meetings with. So, that's a long-winded way to say I've learned a lot about both the importance of leveraging the network that you have in order to kind of have a good proxy filter for the founders you can have some faith in, as well as then the understanding of how to look at a founding team for the right complementary skills and abilities and experience to kind of fill all the gaps of what will be needed for a company to especially survive the seed stage and get to the first institutional the last thing is probably the most obvious, which is the more time you've spent with someone, either because you've known them for a long time, or you've invested in them before, or you've worked with them in some capacity, the larger alpha you have on whether or not that's a good investment to make. And that certainly has been the case for the investments I've made into companies that we're being founded by or maybe joined by early on, people that I had worked with at PowerSet. And the quality of that team reflected directly into the quality of the companies that they would go and join or found.
Yeah, love that. And we kind of breezed through the StartOut to Gaingels story of it. Like, maybe you can explain what StartOut was and how that kind of led into Gaingels.
Yeah, I mean, it was, post-acquisition, obviously, it was a good acquisition. We were integrating the team into Microsoft, but I knew I wasn't going to stay sort of, long term. I wanted to kind of like do other things that felt entrepreneurial. And so I kind of looked at the model that had served me as a founder of the founder networks and the founder lunches and the meetups and so on, where so much of that early kind of ecosystem had come to support my founder journey, and found that it existed for several groups of affinity groups, whether it be women, or for founders of color. There were communities where people were seeking sort of a shared life experience, lived experience as a proxy for connection, which then helped create more opportunities for support, collaboration, and that didn't exist in the LGBTQ community at the time. There was none of it, and it just sort of happened as a random conversation with three other founders I knew, and we're talking about things, and we're realizing that the network and that support doesn't exist. And then the other thing that happened is I had come out shortly after. Actually, September 11 was a transformative event also in that context, because somewhat in a trite tropic kind of way, those are the moments in which you realize life is fleeting, and something could happen at any time, and you'd rather live authentically than kind of feel like you're always hiding a lie. And from that moment onwards, I'd been out with investors and my employees and friends, and even whether it be my personal environment or my professional environment, there was no longer kind of this shadow that was looming over what I was thinking about all the time. But that wasn't the case for some of the people I knew who were also running businesses, and that we're still in a mode where they were like, I'm not out to my board, or I'm not out to my employees, so I'm not bringing my partner or my boyfriend or my whatever to these events. And I remember having these conversations with some of them and trying to understand why that was. This is like 2003, 2005. I mean, obviously the world was more accepting than it was in the 90s. But if you remember, 2008 was when Prop 8 passed, which basically built a constitutional amendment into the California constitutions that made same-sex marriage illegal, right? So it was a moment in time where certainly from a pro same-sex marriage point of view, the pendulum had not yet swung at all. And a lot of the kind of public opinion was still sort of undecided, I think, on a lot of like gay rights and so on. And so, I remember having these conversations with them and asking them, like, why do you feel that way? Like, why do you feel like you have to hide it from your employees or your boards? And I don't know all the details of who was right in feeling a risk or a danger around a revelation or not. But what I can tell you was that the reasoning was always the same, which was, I know what I have to lose and I don't know what I have to gain, which, by the way, was a very similar reasoning, which in the pre-coming out days of Tim Cook, he would offer privately to those who asked him, why are you not coming out publicly at work? And sort of, and the answer that he would give at the time was like, it has no bearing on my ability to do my work, and it's private, and I don't understand why that should, and it's a function of, I still understand the risk associated, and I don't understand what's the upside. And so when he came out, he effectively acknowledged that he came around in understanding that the upside didn't need to be his own upside, but rather the upside of creating visibility for someone who was at the helm of the most valuable company in the world at the time, and to undo and defy stereotypes and preconceptions and so on that may still have existed. My own experience in college had been of changing minds of friends who had been looking up to me when they didn't know whether or not they assumed I was straight, and kind of undid their own preconceptions around what gay people were like or do or whatever, because they now had to reconcile the person with the stereotypes. And I think that notion was also one of the very reasons why we felt like something like StartOut needed to exist, to provide visibility and a platform to people who could be visible role models to others who didn't know whether or not being a founder and being out were compatible. The other piece of it also is the idea of creating some advantage, some upside, some value that comes from making the step in being more visibly part of your own community. Because by joining or being part of the StartOut network, now you had access to mentors and educators and potential investors and programming and all of these other things that were like, encouraging you to step out of your own shell and say, well, okay, well, maybe there is some risk still, and maybe there are some relationships that I might damage by no fault of my own, because they can't accept who I am. But at the same time, I'm gaining the support and the value from this entire community that I only now have access to by stepping into my light and my truth and into my own self, right? So that was the reason. We started it in 2008 in New York and San Francisco. It was a nonprofit. It was high, everything volunteer. And the reaction was amazing. And, 20 years later is now a really thriving, vibrant organization with 20 plus thousand members across the country. 2 accelerators have minted companies that have gone on to raise in aggregate billions of dollars of funding. Some of them have done really well on exit as well. It's not the scale of any other very large accelerator, but for a community like the one that it represents, it's still a really important sort of agent for change, for growth, for visibility, and for integration, and ultimately, I think, for acceptance for the LGBTQ community. And Gaingels was kind of I met David and Paul, the other 2 founders of the Gaingels network, through the StartOut network. David was on the board of StartOut with me. Paul was one of the people that kind of came through the network. We met through that. And StartOut, being a nonprofit, was never going to have capital to allocate or to be able to direct investments into any companies. And as you may imagine, the one single most important thing any founder in any network is looking for is capital. And so David, Paul, and I started talking about like, hey, wouldn't it be cool if we could put together a group of people that actually want to invest in LGBT founders, and we can do this as like a club, and we'll meet every month and we'll invite 3 or 4 companies, and like there's many other angel groups and angel network. That's how we started. And we made very high risk, often lead first check investments at very small valuations into companies that either were going nowhere or occasionally were going somewhere, right? But ultimately, we had a pretty narrow view of the overall kind of ecosystem. I'm not weary to kind of call it negative selection or adverse selection, but anytime you're artificially constraining yourself from not looking at a number of opportunities that may be in your purview and network, you're doing a disservice. You're getting less alpha, you're getting less information, and so on. So
100% agree.
While we did that for a number of years, we were like, okay, well, why does Gaingels exist? Gaingels exist, yes, to provide investment to to founders who might be overlooked, but ultimately because we want to make the venture capital ecosystem one that is more diverse and inclusive and better, with more open doors. And this might not be the only way to do it. And so we effectively engineered a different way to achieve the same goal, which was how do we move the needle for an ecosystem that is still very much tied to networks of who you know and who you've worked with, which, as I've said before, I'm not trying to pass judgment as to whether or not that's a good thing, but it is the way that it is. And it leads to bad outcomes sometimes, which is you end up with lack of access for people that are belonging to networks that are less likely to be integrated in those. And so you end up with women getting less funding, LGBTQ and people of color getting less funding without proportionally less, right? A lot less than what the proportion of who they are in the population. And so the point was like, how do we create an environment that is making that less of an issue? And the way that we've discovered or that we've developed is to basically invite the most diverse group of investors into the network to have access to any company that values diverse leadership, talent, and capital, and then helping each company in a different way, depending on what they need. Because by the way, diversity is also not one dimension, right? Like you could have an LGBTQ founder in a company that is otherwise very non-diverse. And so you need to help each company to do what they may want to do already, but they may not have the tools, the instruments, and the knowledge to achieve. And so, through things like the Gaingels letter and tools and ways, and our board access program and a number of other sort of programs, we would help the companies that we would invest in. And even the companies that didn't need the help all of a sudden became companies that had a more diverse capital table. And if with a more diverse cap table, the companies that do achieve great success and exits and liquidity then get that money into communities that traditionally had been excluded from that wealth generation engine and now are likely to reinvest it into their own community. So that's literally how the evolution of Gaingels came about. And I think that that was a very smart thing that ultimately led to scale and to sustainability for our investing strategy.
It's amazing. So you guys started as a syndicate, and it sounds like it started on AngelList because AngelList started doing syndicates around the same time, around 2013.
We started
14.
as an angel group, which meant that we were doing literally like everything on email and not even syndicating into SPVs. We would get together and then you'd be like 30 people and people would be like, I want to invest and I want to invest. And people would write their own checks directly on the cap table. These were small investments, small companies. That is like the traditional angel network that existed. Like syndication as a real thing didn't really start to exist until AngelList was born, and then until a few other people kind of like took their network and tried and started to kind of switch from the idea, I'm going to raise a whole bunch of money up front and then decide where to put it, as opposed to raise single asset funds just in time, right? And that, I think that that started in 2014, 15. And we didn't adopt that sort of business model until 2018.
Oh, wow. Okay. Now, I'd love to get into the structure and volume and operations, right? You know, I was just patting myself on the back the other day because I just crossed 300 investments and you guys have 2,700. How do you guys manage that operational complexity of 2,700 portfolio companies? I mean, they're not all active today, obviously.
Yeah,
but.
yeah. Because we have a 15-year, almost 15-year history, and because I would say we've learned to crawl before we learned to walk. You know, in the early days, we certainly were not doing the volume of investments and so on that we've been doing in recent times. Because of it, we also had, like, we didn't want to take on costs that we didn't need or didn't want or didn't have, right? And so all of a sudden the idea of like using AngelList or using Assure or using whatever it existed
Sidecar these days, yeah.
Sidecar now, but at the time didn't exist sidecar, like feel like smart, like it was eating meaningfully into the very small economics that we would actually have. And so we kind of like, well, let's figure out a way to do it on our own. You know, early on, it's like spreadsheets. And then you kind of like, let's put together a database. And then you build Airtable. And then you do this. And before you know, you have enough complexity and automation and technology to be like, well, we kind of built our own mini business and kind of technology wise that, you know, I don't think any of us ever thought was good enough.
It kind of accretes over time in a way.
Yeah, but
right?
I mean, it's not like we didn't build it as a product, which means that we never had the idea, oh, let's go be in the sidecar business, right? But we were happy to eat our own dog food, so to speak, and so we never had to kind of use any of those external platforms. At some point, we started getting connected with, collaborating with, and building a subset of our syndicate using AngelList, and that's how you and I, or Gaingels and you, kind of started to collaborate as well. And so a part of a portion of our syndications happens through AngelList, but a very large portion of it continues to exist on our own platform, which we manage internally. And
interesting. So you spin up your own LLC, kind of manage all the taxes and K1s for each thing. And you find it cheaper. It's like, you know, the all-in price on AngelList now is like 10K. Sidecar starts at 4,500 plus Blue Sky, and it kind of caps at 12 to 15, depending on the size and complexity of the state by state, Blue Sky, and all that. Like, what is it to kind of run it on your own? What does that cost savings?
Well, I mean, we find it that it's comparable. Like ultimately, if businesses are smart and there's no fat and there's no inefficiency, these costs should converge to the true cost of running this, because if the margins are too high, someone else is going to come in and eat those, right?
And that's what we see with lots of SPV providers right now.
There are other reasons that are not economic why you might want to have a tighter control over the operations. Like we can control K1s and the schedule of when we send out tax and so on. And we find that we are more timely than most, certainly Assure ever was. And we find that having a direct connection that we own with the LPs has a lot of important sort of elements. We can serve our own mission much better with our own direct connection to LPs and understand things about their demographic and so on. If you do things on AngelList, then and you bring new people onto AngelList, you're automatically bringing them into other syndicates as well. There's all sorts of reasons why. If
I read an article on this, I don't know if you saw it, the AngelList were breaking up article.
If the cost is equivalent or ballpark equivalent, then you start looking at other reasons why you may want to. And by the way, the last, but I would say probably one of the most important is maybe you can make an argument that AngelList is big enough that is too big to fail, I guess. I don't know. But like, look at the mess that happened with Assure.
Yeah.
And all of a sudden you had thousands of stranded SPVs. And the last thing that we want to be with, thousands of individual asset funds is to kind of be in that situation. So, you're controlling your own destiny much better. And hopefully you continue to rise up and go up into the right. But if things go badly, at least it's not because some other company messed up, they couldn't raise money, whatever it is, and now you're left with trying to clean up the mess that someone else created.
Well, are you guys only syndicating, or I think you guys also have a fund now, right?
We have a few funds, but ultimately the idea there is that once you have enough LPs, some of them start to be interested in ways of deploying capital other than, hey, I need to be paying attention to every deal that comes onto the platform and making my own decisions. And you start to build enough of a track record to be like, okay, well, let's go to our LP base instead of you choose the 20 deals that you want to invest in the next 2 years. Why don't you give that responsibility to me or to one of my partners? And so we've raised some small funds that are tied to some investing strategy, whether it's a sector or a stage or so on. But it's ultimately syndicated through the same group of people, and it's multi-asset instead of single asset. And yeah, it's part of a diversified way of deploying capital. Some companies, as you may very well know, being that you're in the business, some companies don't like syndication for whatever reason.
Right.
Sometimes irrationally don't like it. And so this becomes a way for those same people that would have invested in that company to be an investor in that company. And ultimately, the economics are exactly the same. So we don't make any distinction.
Yeah, I like that. Yeah, that's what I noticed too is, some companies didn't want to be syndicated. Valuations would change, especially for high demand opportunities. Hey, we're oversubscribed. We were at a 10 cap. Now it's 15 or 20. Like, well, I just spent 2 weeks raising the money, or 2 or 3 weeks raising the money and getting ready to wire you money, and now the valuation changed. The worst thing that happened to me a lot, 3 or 4 years ago is, okay, I'm ready to wire. Oh, well, the round's closed. Sorry. Well, I just went and spent 10 days raising the money.
I have horrible. When you have 2,700 portfolio companies, you're bound to have some horror stories. And I'm not going to name names and tell those stories, but you have founders that behave badly. You have co-investors that behave badly. You have investment bank, especially in the high demand later stage deals that invest terribly, that behave terribly. So I have a lot of,
I'd love to hear some of the most egregious battle scars you have, as a fellow early stage investor. That's maybe 10 years beyond where I'm at. I'm about 5 years in. You're 15 years in.
Yeah, I mean,
without naming names, of course. Yeah,
obviously, but it's kind of a combination of it's a variation of what you said, right? Which is effectively you start having a conversation, you try to, and we really do try hard to kind of create a bespoke process that works for the founder. And so, if you're concerned about information or distribution or reach out, or even the fact that the notion that your round exists is something that you're we have all sorts of ways to deal with that in a way that we find in our experience is more than satisfactory for the vast majority of founders. And sometimes you get to the position where you can't satisfy those things, and that's fine. Not every relationship has to lead to an investment, and it's fine. But then you get to the point where you're kind of like, yeah, okay, yeah, that works for me. Let's do that. And so you do the work, and you get the money, and you talk to people, and you flip over backwards to make sure that every piece of that is covered. And then when you're getting close to the end, you basically get something that says, hey, I know that for the last 6 months, you've held the capital that we said you could invest. And we've been talking about when the round would close and which close you needed to come in, but we've changed our mind. You can't invest anymore.
That's the worst. Then you got to unwind the syndicate. Those are the worst conversations when you have to unwind the syndicate.
The syndicate, but it's you lose the trust of the people that maybe had chosen you to invest in that particular high demand company instead of some other SPVs that they could have gone into. I mean, there are so many, and that reflects really poorly, I think, on the founders in that way. And look, some founders will always have the negotiating power and the cards on the table, I guess, or whatever. But some other times, those same founders come back and be like, oh, now would like you to invest. And like, I think the reality is people do have a long memory, and this is a relationship business first and foremost. I don't invest in companies just because I want to move money and put it in there. If I invested in a company, whether I invest with a single asset fund or with a multi-asset fund, I am the partner that invested in your company. And then I am feeling equally responsible to you as a founder and to the LPs that we're part of that fund. Like I literally think of any SPV as a fund that just has one company that it invested in.
That's effectively what it is.
It is, right? Yeah. And so and I'm the GP, and I look at my responsibility post investment. Like the difference is only pre investment, right? In one case is you've got the fiduciary responsibility of deploying the capital that has already been given to you in the multi-asset fund. In the other case, the single asset, your fiduciary responsibility starts after you've made the investments effectively, and now you're the sort of custodian of that relationship and want to make sure that you manage that investment well. And I think one of the things that I'm really proud of Gaingels and what we do is that I think we do a really great job. And if you ask founders that have gotten investment from us, typically the story you get or the line I've heard is Gaingels punches above its own weight. You'll invest a relatively small check. I mean, I think in our below Series B checks are all in the $100,000 to $500,000, so they're relatively small checks. But we help and we engage with a company as if we'd invested 5 million or 10 million. Time and time again, what I hear from
How are you able to scale that across thousands of, asking for a friend? How do you, yeah.
Great question. Well, turns out we're still not lead investors, right? Which means that we are not in your business and we're not taking board seats or anything which obviously would be undoable at this scale. But, in some way, like Y Combinator does, we are extremely reactive as opposed to being extremely, very proactive. So we won't be in your business, but the minute there is something that you think we might help you with, or even if you generally are sending out an email and saying, these are the things that we help with, that we need help with, we are very good at leveraging the resources we have to satisfy those requests and to help those companies. And whether it's an introduction, which we can do at scale, and then God bless AI for a lot of the things that it has enabled us to do at scale over the course of the last 3 years that before was really hard to do. And, look, 3 years ago, also we had maybe 1,600 companies or 1,700 companies in the portfolio. And like you said, not all active and, all of those things. There's also a few of us, right? So not each one of us has the companies that they've invested in. And so difference between the companies we've invested $2-3 million in and the ones that we've invested $25,000, which often are like a placeholder check for something we might do in the future.
Well, I'd love to go back to Broadway storytelling, producing Broadway plays, and what do you think what kind of impact that's had on your life and your investing thesis and how you kind of approach all of the above?
Yeah, I mean, I think just like in venture, you can be solely motivated by the financial return, or you can have larger aspirations of seeing technology that moves the world in the right direction or making impact on communities that you feel like has a societal value to make an impact on. There's obviously, sort of impact investing as a category, but I think there's different ways that one can go into deploying capital as both a way to sustainably create more capital as well as to have an impact that is collectively or individually what you want to see happen in the world. And I see Broadway as a similar way. Look, if you're asking me, is it the best way to deploy capital to make more capital? No, there's plenty better ways to deploy capital to make capital. But it is possible. Entertainment, media, and Broadway have some of the most profitable enterprises in the history. Look, there are better ways than Broadway to deploy capital to make capital, but there are definitely opportunities out there that end up with 100x or multiple 100x, if not 1,000x returns over decades, right? And unlike a venture business where you're looking for an exit, an IPO, and a sale of your equity, you could be an investor in Hamilton and make money hands over fist for decades, or Wicked, right? For decades and decades. But that can't be the reason why you do it. And the reason has to be I think it has to be a combination of wanting to create something or to be a part of creating something that has legacy and lasts longer, outlives you, right? Becomes part of the cultural patrimony of the world. And, it's certainly the reason why I helped create Allegiance, the reason why I have done shows like Indigo or Hadestown or many other. And look, Hadestown ended up being a massive success, and sometimes you hit it and sometimes you don't. But if you do it for the right reason, I think you end up with a really, full heart of like, hey, we've created this and was worth doing it, and now it gets revived or created or lives on in all these different ways. And art, I think, there's a lot of different type of art, but like theatrical and performance art has a very unique ability to leverage stories to change people's minds and hearts, and to offer criticism to power structure and to history, and to, I think theater is the quintessential art that has survived every other art form, has been with humanity for thousands of years. And it has been the way in which hard messages were delivered to kings and powerful people. And it still does have that kind of cultural potential. And, I have a desire for things like Broadway is to kind of look at the hard questions of the business model and the finances of it, and asks, how do we make sure that we don't, in service of making sure that it continues or it can continue to be sustainable financially, and so cover ever growing costs and attracting audiences and so on, do we make sure that we don't sacrifice the other important pieces of what theater really is and can be? Things like accessibility, things like important stories, things like new voices and new authors and new perspectives, instead of, say, go and redo the same IP for the 10th time with 3 movie stars, right? Which, again, there's a space for that, obviously. But if that becomes the crutch through which seemingly sustainable business out of a broken machinery, you're trying to patch the symptoms and you're not kind of addressing the root issues and the causes. And so, we're seeing a lot of development productions of more risky theater going to the UK because it's cheaper there. Broadway starts to become almost a loss leader. You have to kind of like be like, well, we're going to lose money on Broadway, but if it succeeds in certain aspects of it, whether it's the press or Tony Awards or whatever it is, then you can go and leverage that IP on the road or in other ways, and sort of create an enterprise that ultimately is sustainable and makes money. But again, I think you have to find the right partners and the right reasons to kind of go after, at least from my point of view, go after opportunities that are incredibly fulfilling and important and valuable to pursue, fully understanding the high level of risk. And, I think the same can be said for venture, right? The difference is you've got 30,000 companies being created every year or whatever it is, versus you've got maybe a couple hundred or 300 shows that can open between Broadway and the West End and kind of like the big markets every year. And so even if the percentage actually is the same, it's like 1 to 5% is a blockbuster, 20 to 30%, 30-40% is a medium to a net zero, a break even, and then everything else kind of loses all its capital. Those are very similar dynamics as it in venture capital. The difference is the numbers are much bigger in venture, and you've got thousands of hits at a base, strikes at base. And with the same batting average, you can have a better type of return.
Yeah, that makes sense. Well, looking out to the future, take the next, 3, 5, 10 years, what are you excited about?
Well, I'm excited, very excited about the work I'm doing on the AI investing side. So, I manage all of the artificial intelligence investment side of Gaingels, have deployed a full AI fund out of Gaingels, and will be looking in the future at doing that again. And I'm also very excited about my creative projects, right? So the especially the work on Indigo right now, which is this new musical I've been working on, which opened in Leicester, will be opening in London later this year, early next year. It's a new original musical about a family centered around 3 women, a mother, a grandmother, and a granddaughter, all tied together through generations, but through the unique circumstances that have brought them there. The young woman, the girl the show is told through her eyes and through her perspective, is a non-speaking autistic teenager. So there is a completely different dimension of how the world is experienced and what communication and empathy looks like for her. The grandmother is a woman who in her mid to late 60s is showing signs of early onset dementia and Alzheimer, which has some really interesting parallel dynamics to autism in a lot of ways, or non-speaking autism in a lot of ways. And the mother, Beverly, is caught in between with all of the choices, mistakes, secrets she's held for a long time. And they found for the first time the opportunity to come together, live together under the same roof, and build a family, and ultimately discover what makes the bonds of family the ones that the important ones. And it's beautiful music, completely original. The actor that has performed the role of the young woman has been a teenager actress, an autistic actress every time we've done it, and will continue to be important for us to represent that role authentically. I think in a lot of the work I've done, it's been about how do we tell universal stories about love and connections and empathy and communication and acceptance, but through voices and perspective that are undiscovered, untold, lesser known, maybe even unfamiliar, maybe even uncomfortable. And as an audience member, you're invited in to kind of like experience what that is in a new way and learn about it.
It's amazing. Well, let's wrap up with some rapid fire wrap up questions. What's the best founder trait you see over and over, and how do you spot it in the first 10 minutes?
I would say vision, and I spot it through a combination of storytelling and enthusiasm around it. Effectively, what vision kind of captures for me, though, is why that person is uniquely suited to go after that problem. Why is it a single obsession, right? Single-minded obsession for them? How big and ambitious the kind of idea for the impact that they can have with their business really can be. How you spot it in the first 10 minutes, I let them talk. And I want to hear how they got to where they are. Like, why are they sitting there in front of me and telling me that story? There is an origin story for that, and I want to hear it. Then, it largely becomes intuition, and a lot of that intuition is wrong, but sometimes happens to be right.
Yeah, it's definitely, I didn't get a chance to ask you this, but why the high volume strategy? I think I have my own reasons, but it sounds like you're investing in roughly 300 companies a year right now.
There's a couple of different things, right? Which is, as an investor, when I'm making an investment decision is somewhat different than making a syndication decision. A lot of that early kind of establishing of who the founder is and who the team is, and is reflected in who are the partners that we work with as co-investors, right? So, the high volume is a reflection also of the fact that a lot of investors, a lot of LPs, what they want is they want to feel like they're investing with the smartest investors in existence. And the only way to do it that traditionally is you go be a LP in Sequoia's fund or in Insight's fund or whatever it is. And so the next best thing is you get to be on the same cap table as Insight and Sequoia and Coastline and whatever it is. And so that's one answer to the high volume. The second answer is, if you're doing syndication, not every deal is right for everybody. Everyone has their own individual strategies and ideas of what they want to invest in. And our deal flow, because of how we positioned ourselves, is not specific to one, either it's not Harvard and it's not this particular technique and so on. And then finally, the third, if not the most important, is go back to why Gaingels exists and what our mission is. If our mission is to change the ecosystem at scale, the only way you can change the ecosystem at scale is by having scale yourself. Right, is basically to be like, we have to be in as many companies as we can in order to be able to make changes at a scale of an ecosystem when it comes to looking at companies that value inclusive leadership, talent, and governance.
What's one thing that most VCs get wrong about underwriting non-traditional founders?
I don't know if most is the right answer, but there are definitely VCs that do it for the wrong reasons, right? They are doing it to check a box, and they are doing it without the conviction that any given investment is necessarily a good investment to make, but with the understanding that if they make that investment, there will be some other benefits that will come to them, either in the form of deal flow, reputation, or otherwise, right? You can call it pinkwashing, greenwashing, whatever you want to call this, right? That's certainly a mistake that I've seen VCs make. The other VC, to some extent, it's the same type of mistake is probably just looking for a token investment or to kind of like look at quotas or anything like that. That basically again has little kind of rooting into finding the undiscovered, overlooked founder, and instead say, okay, well, if there are underappreciated, overlooked founders out there, what kind of characteristics do they have, and what is it that they know uniquely better than anybody else, and what are the type of businesses that they have alpha into going in and building, right? And so I could certainly name businesses where, especially in the fintech space and lending, you have a certain category of founder that knows a certain community so well and understands the financial issues that community experiences in and out, day in and day out, and they're the best ones to go. If they had the understanding of those problems and the initiative to go, and the agencies to go and starting a company to address that problem, they're more likely than a counterpart who does not have that same shared life experience to actually solve that problem effectively. So that's the other side of that coin. I think that's the right way to make investments into underrepresented founders. And then you want to maximize your chances that you see a lot of those founders. And so what you do is you look at your top of the funnel and you're like, hey, how are we getting our deal flow? And is it when I look at ways of categorizing the deal flow and the founders, do I see patterns that are strange and that are probably inefficient or coming from inefficient networks? If so, then what are the ways in which you can fix it? And honestly, Gaingels is one of the ways in which you can fix it, right? It's literally existed as a way for other investors to kind of like, how do I make sure that my portfolio is more diverse, more inclusive, more cap tables that are inclusive, and partnering with Gaingels is a good way to do that.
Yeah. What's a belief you held strongly 5 years ago about tech or culture that you've changed your mind on? Could be 10 years ago even.
It's not the best answer, but like maybe that just raising venture capital and as much capital as is available to you at any given point in time is a good strategy for a founder. That may have been the belief I and a lot of people held in 21, 22, but it's definitely not the case.
Raise just enough to get to the next milestone, basically, rather than as much as you can.
And
yeah.
If there's a lot of capital available to you, then the automatic kind of strategy is, well, if there's a lot of capital, then I'm going to take whatever capital at a higher valuation.
Yeah. Instead of like 2 on 20, maybe I'll raise 10 on 100. It's like, well, gosh, you only have 500K of ARR. Maybe you shouldn't do that.
If the trend is always up and to the right, then yes, that's fine. But the reality is that it's not the equation between capital available, valuation, and equity is not just a function of capital and the company. It's capital, company, and a macro environment.
Yeah,
and
the market,
if the environment changes, which it does, that point in time, the choice you made at that time now is completely setting you for a really bad next raise or sort of performance in the market later on. And we've seen this with tons of companies. And I think a lot of investors have learned that lesson.
What is the best piece of advice you've ever received?
By far, the best pieces of advice I've ever received is be obsessive compulsive with your network, how you know it and how you can help it.
And how do you do that in practice? I'm curious.
Well, back when I received this advice, which was close to 25 years ago, that meant tagging my Outlook contact book with everything I could and making groups and understanding and knowing everybody in and out, and then being ready to kind of connect people and helpful and so on. And over time, technology has made these things easier and faster, but it ultimately becomes a mindset. I think there are people who develop a skill of becoming super connectors, and ultimately, there are things that you can do for someone, but most of the time, the way to help someone is to find the person who can do what it is that that person needs. And so you can be a person that has a lot of good skills that people might need, but the way to scale out your helpfulness to people is actually to be really good at finding the people that have the skills or capital or whatever it is that can help the person, that because you're certainly going to be a beneficiary of the reflected benefit you're getting. And so, I've made that my entire, like, I don't know if I've made it my personality, but like it exists in my professional life, in my investor life, in my theater life, and in my personal life. Like, it's just the way that I think about if I see someone who needs help of any kind, the first thing that pops into my mind is, who do I know that can help this person.
Well, Lorenzo, thanks for sitting down with me. Really learned a lot. What an incredible journey. Thanks for all you do, and look forward to following your progress and maybe seeing a show when I go to New York.
Yeah, for sure. Thanks, Brian. It was a pleasure.